The housekeeping principle is really a very simple one. We all have to understand that there is a very simple matter here in the United States and quite frankly in most of the world, and that is that when you prepare a tax return, it's done for tax purposes. So if you're going to a CPA and you're spending good money for your certified public accountant to do your taxes, what you're really paying him to do is to minimize the amount of tax that you have to pay your government. What we do is basically the antithesis of what a CPA does. We as M&A professionals will take your balance sheet and make it look the reverse of what your tax return looks like. Meaning, if there are certain things on the income statement, profit and loss, and balance sheet that are there because they inure to the personal benefit of the owner of the company, that may not necessarily be something that you want a buyer to be looking at. And let's take a simple case in point. If I elect to drive an S-Class Mercedes-Benz and I elect to lease that car and have all the insurance paid for by my company, and have all the maintenance paid for, and all the gas paid for, and all the other things paid for, and if I care to drive that car to the golf course where I may or may not have my corporation paying for my country club membership, and if indeed I decide to take my clients out to dinner afterwards, and all that is showing up on my P&L, are those necessarily business expenses? And some might say, well sure, if you're taking a client out to dinner, then that's a business expense. Well, what if that's my wife and my two best friends instead of a client? Now, I'm not saying that I do that, and I'm not saying that you do that, but you know what I found in this crazy world of mergers and acquisitions is that it happens quite often. So when we refer to housekeeping, this is just one small example of some of the things that have to be done to clean up the income statement so that the true profitability of the company is showing. Some of the more sophisticated things that may be happening, and maybe I shouldn't use the word sophistication, but we see such things as a building owner, which may be the corporation that also owns the company, has got a landscape expense in there. And we might take a look at it as we're doing a strategic options analysis of the company, and we'll say, gee, $50,000 a year seems like an awful lot of money, especially up here in New England, to be spending on landscaping. Well, when we ask the owner of the company, what we usually will find out is that not only is the building ground being landscaped, but his home is being landscaped and his daughter's home is being landscaped too. Do you really want those things to be showing up in your P&L? Now, I'm not suggesting that people are doing things to purposely avoid taxation, but you know, stuff happens. And when these kinds of things are happening and they're reflected on your P&L, they have to be properly adjusted by an expert that can do so without anyone having any danger of other experts, shall we say, that might be related to taxation, taking a peek at it later. So trust yourselves with an expert in the merger and acquisition field that knows how to recast financials to paint your company in its best possible picture.